makes you eager to grab some of the stuff for yourself. Let's bring a gold expert, Adrian Douglas, CEO of Market Force Analysis, to give you some pros and cons. So you're listening to it. And really, we brought you in because I thought Congressman Ron Paul was going to come on and say, I think we need to tie gold, the U.S. dollar to gold. If we were to do that, my guess is gold would just absolutely spike through the roof. Am I right?
You're absolutely right. But you can't disassociate these two. What is the dollar? If you go back to the gold standard, the dollar was a deposit slip for gold that you put in the bank, and we use that as currency. So what we did in '71, when Nixon took us off the gold standard, was that we took away the deposits and we continued using a bankrupt deposit slip as money. And this is a joke.
Right.
So this is the problem. Now we are increasing the supply of these deposit slips, which have no deposit underneath them.
All right, let's move on to the individual investors. People are tuning in. They say, boy, did I miss the boat? $1,310 an ounce. Is there still upside for gold? Give us a reason why gold should continue to go up.
Well, there's two reasons. One is currency debasement, as you've been talking about, printing too many dollars. The second, which not many people know about, is that because gold is unique, people buy it and they leave it in a vault. Unlike any other commodity, if you buy oil or soybeans, you want to take delivery. So this allows bullion banks to play some trickery, and they sell more gold than they actually have. I estimate that they've sold 45 times more gold than they actually have.
So at least, sir, by the way, at least 45 times more. The amount of gold that's traded in the world just dwarfs the amount of gold that's in. By the way, 163,000 metric tons of gold fits underneath the Eiffel Tower. Why would gold go down now? Gold
won't go down for those reasons. One is currency debasement, and the other is that people are asking for those 45 ounces are only backed by 1 ounce because they don't trust the bullion banks.
Adrian, hang in there for a second. Go ahead, Bo. You want to jump in?
You got to look at when gold was $300 an ounce back in 1970. Let's all talk about what has happened, the inflation that has occurred. So by it correcting itself and going up a little bit, $300 in 1971 bought you a hell of a lot than it buys now. So what it's really doing is correcting itself, as far as I'm concerned, with the inflation.
Well, let me go back to Adrian real quick, sir. I'll tell you why gold could go down. I'll give you, sir, hold on. I'll give you one reason why gold could go down. It costs about $250 for a South African miner to bring an ounce of gold out of the ground. If you're a brand new miner, it's about $500. So there's a lot of profit margin to all these miners who are pulling the gold out of the ground. If they decide to say, you know what, that's it. Every ounce of gold I bring out of the ground, I'm going to sell it forward. That'll drive the price right down.
Nah, they're taking out infinitesimal amounts.
Go ahead, sir, real quick.
Okay, so although we're off a gold standard, the gold of the Treasury is still used as collateral. They have 261 million ounces of gold, so they say. We're not sure they do have it. You've got $13.5 trillion issued, so divide one by the other, that's $56,000 an ounce. If you take the bullion banks who've sold 45 ounces for every one they have, 45 ounces times $1,300 is $58,000. So that means the 1 ounce they actually have is $58,000.
I've been trading 22 years, and you got my head spinning right now. But I will tell you, Monica, with about $900 profit in an ounce of gold, and if I'm bringing literally millions of ounces of gold out a year, eventually I'm going to say that's enough. Price is good. I'm going to start. And the minute, you know, markets,
and then
the minute the word gets out that Barrick Gold or one of the other ones is selling gold.
You're talking about market forces. To Bo's point, Bo's talking about in the early 70s, gold about $300 an ounce. Now it's what, $1,400 almost. Might even close in on $1,500 at some point. Why? Because of economic volatility. Gold has always been a safe harbor, especially in troubled times.
But
and
what
people
we
are
just
increasingly going
what we
to.
just heard from Adrian blows out of the water what we just heard from Ron Paul. Because what Adrian said was, you know what? There's not really gold being held in those vaults. 45 times the actual gold being held is being sold. So everything here is based on a modern policy. We try to manage gold, we manage dollars. That's the reality.
Hey, Juan. We're $13.4 trillion in the hole, and we go to China and say, Don't worry, we're good for it. Just keep giving us some more.
And you know what?
I want to talk about a Ponzi scheme.
What is
There's a Ponzi scheme.
Yeah, but what is
Adrian Douglas, thank you for joining us. Up next, they say you can't tell, or you can tell a lot about someone by the company they keep. What do President Obama's friends say about him? The shocking details when Money Rocks returns. Fox Business, the network where you have the power to prosper.